Good morning, gentlemen. Welcome to the Traditional Super Review AIST roundtable, and it's sponsored by CommInsure. The group insurance area has been pretty interesting from the point of view of all the insurers, actually. They seem to have been pushing some serious premium rises on some of the funds, and the texture of the industry has changed a lot from what it was 2 years ago. And I'm going to start with Geoffrey Scott on this one, because he is from CommInsure after all. But do you think we've seen all the change we're going to see and the pressure on premiums, or is there more to come?
Thanks, Mike. I honestly think there has to be more to come. I think the main reason is that the life insurers in the marketplace have focused far too much on competition and not on appropriate risk selection. And so when they've actually gone to the individual trustees and put their marketing plan in place, they've sold some really tremendous benefits, but they haven't sold the equal risk selection process. And currently, with the high automatic acceptance levels that are sitting there for most members, where a person can join the fund, have no underwriting, and get automatic cover for death and TPD and sometimes income protection, that potential risk needs to be passed along or caught someplace. And what we're finding now is that that inappropriate selection of risks that has occurred over the past 3 to 4 years is now catching up with everybody, and it's now being passed on with higher premiums to members. So I think that the insurance companies need to work with the trustees to make sure that the benefits that are being provided are cost-effective benefits to the members, but we also manage the risk so we don't pass on those significant premium increases that we're starting to see across the industry.
Alex, you've doubtless looked at your insurance and what's happened with your fund.
No, I think no different to anybody else that our premiums have increased. However, I'm still a really big believer in the value of cover, within the fund. Simply, in particular, for our members, because a lot of them, are in dangerous occupations. So it is still, despite the increases, it is still very good value for them. One, that they'll get the cover, and two, in that you've got that collective bargaining premium, which despite the rises is cheaper than what they'll get trying to purchase it themselves. And in fact, I think through the engagement with the fund, they're more likely to increase that cover as well. So we just accept that we've come out of a price war, and I think the funds have obviously benefited that for some time, and now those prices, those premiums are unsustainable. I don't think anybody likes it, but that's the way life is.
Andrew, as another fund CEO, what's the feeling? It's a very different member demographic, I must say, to Alex's, but what's your feeling on it?
Yeah, no, I think that's right, and that's actually one of the key factors for us, really, because we're essentially a white-collar professional occupational group, and have always focused on the fact that because we have that more homogeneous membership, we can be nimble in the way we negotiate the insurance arrangements we have for our members. And so our last review that we did, and it's been some sort of coverage of this, but the last review we did of our insurance resulted in securing a 3-year premium freeze. So unlike the increases that many other funds have, and particularly large funds with multi-occupational groups in them, we've got those premiums locked in for a 3-year period. So I think what that really says, and it's a topic I often make comments on, which is really the value of having a smaller, niche-focused fund. I mean, I think if our members were sitting in Australian Super at the risk of picking a fund randomly, they would not be in an environment where they were protected from the trends that are going through in terms of premiums at the moment. So we have that 3-year premium freeze, and if they were often another fund which had large increases, they'd clearly be experiencing large increases. So it's only one tangible way that I think the smaller funds can demonstrate they can be not only nimble and clever and innovative in what they do, but they can also be very commercial and have success in negotiating. And being bigger is not necessarily better always, and in fact being smaller sometimes can have its advantages, and you just need to know what those advantages are and play to them constantly.
With that, gentlemen, thank you very much for your time this morning and for getting up early. And that's it